Good morning to all of you. Wonderful to be back in Bangalore once again. Some of you are aware that we did an event here on December 12th, which was dedicated to outbound investments for Indian residents. The response was so overwhelming. We were looking for an excuse to come back, and this SIF summit gave us a nice excuse to be back again with you. Okay. So today it's about SIFs. What I'm going to be doing over the next 10 minutes or so is going to be giving you a curtain raiser. I'm going to set the context, why we're meeting today, what can you expect to look forward during the day. And for some of you who may not have observed the SIF category so closely, I will try and sum up what has been happening in the industry over the last 1 year or so. Okay. So what happens is every few years, a new product category comes into existence, which changes not only a new product category, it changes behavior. It started in 1963. What was the development in 1963? Can anyone try and guess? UTI, of course. So UTI came into being. So UTI came into being, and while it came out with US 64, which was structured very loosely like a mutual fund. It was never understood to be a mutual fund. It was never sold as a mutual fund, but people knew that this product is going to give them returns. And then things were the same way for another 30 years till what happened? What started? 1993, what happened? So private sector mutual funds came in, and then we had India's first open-end fund with a daily NAV. So you could come in and you can go out at the NAV-related prices. Okay? And then once a mutual fund started propagating something which has changed the Indian capital markets completely and investor behavior. What is that? SIP. So SIP, as we know today, has really become a household word. And after SIPs, this thing brought two product categories came in, popularly known as alternates. One is PMS, the other one is AIF. Okay? And now we have SI. So this is a new product structure, and we will see how it came into being. So it started all started in 2025. Now, what led to this thinking? SEBI found out that investors were becoming very aware. Their portfolios were getting larger, and they were looking for things which was beyond plain vanilla diversification. So, what was the solution? Also, the investors were looking for something which would go beyond market movements. Mutual funds, as we know, go up and down with markets. Now, it is something which can protect them against that, which can make their journey a lot smoother. So, with this particular framework in mind, with this particular perspective in mind, SEBI came out with a SIF framework in April 2025. So, this was meant for people who were looking for more strategy and flexibility than mutual funds. And I'll come to that a little right now. So mutual funds, as we know, are very transparent. They're simple product category to explain to people. They're very accessible. You can start by investing as low as 100 rupees in many of the mutual fund schemes, 500 in most of them. And but over a period of time, people realized this was a very plain vanilla product. People were looking for something more exciting. And then we had these AIFs. And AIFs are more flexible. They also are more versatile in terms of the range of instruments that they deploy. So, but that makes them more complex. Also, the minimum limit there is 1 crore. So it is not accessible easily. So SEBI said, let's look at something which was in between the two product categories. So, which will have a mutual fund-like structure, taxation like a mutual fund structure, but more uh, flexible in terms of what it can do, where it can invest in. So SIF came into being, and it has a mutual fund like structure and a tax similar to mutual funds. Now, what is it that SIFs can do which mutual funds cannot? So, one, they can actually benefit you in both falling markets and rising markets. Like I said a little earlier, mutual funds go up and down with the market. Okay, largely move up and down with the market. Here, they can actually protect you. They can give you returns in sideways markets also. One very important thing is mutual funds come with a lot of restrictions. You would be aware that there is a restriction on the how much an individual stock can be in a mutual fund. So there are restrictions that they cannot go beyond a certain percentage. So you cannot run a concentrated portfolio in a mutual fund. In an SIF, you can. Okay. The other thing is mutual funds also, SIFs also look at tactical calls. So depending on what the valuation is, where the market trend is, what are the events taking place, they move very fast. They take tactical calls. Mutual funds, by philosophy, equity mutual funds, think long term. Also, like I said, SIFs are not necessarily looking for returns. They're looking for a more consistent, for a smoother journey. Okay. And they generate returns in sideways markets. They offer better risk management because they hedge, and they have access to far more sophisticated strategies, and they provide a smoother investor experience. Okay, when should you use SIFs? So very clearly, when the clients are looking for uh, downward protection, they are looking for something which goes beyond market movements. They don't want to be their portfolios to be. They want their portfolios to be somewhat insulated from market movements. And when your investors evolve, they're not happy with plain vanilla products. They're looking for more excitement. One very important thing is, as MFDs, a lot of people believe that they provide product access because you know what a mutual fund is, you know how they work, you're providing your clients access. But to me, you are actually providing a portfolio solution. Okay, you're not just providing product access; you have a more strategic role to play. Okay. Oh, okay. Sorry. Thank you for pointing that. Okay, I'll stay out of the way. And so, okay, no problem. I think this is the best. Most people will have a clear view of the slide. So today there are 15 AMCs which are already active. There are many more in pipeline. To just give you an example, a company called Nuvama, which is a big player in the wealth management space, is starting with an SIF for that matter. And we have seen multiple strategies being launched. And already the industry has an AUM of 13,200, and over 7,000 distributors are already eligible to sell SIFs. Okay. 21 live strategies have been launched, and the most popular category has been actually the hybrid long short. Okay. The AUM growth has been spectacular for a new product category. In just 8 months' time, it has grown from 900 crores to 13,200 crores. So shows clearly that distributors like you have gone and spoken to some of your clients with whom you enjoy a better relationship, some of your clients who have a bigger portfolio, some of your clients who are looking for more excitement. So where is the money going? The money is going largely in hybrid strategies. So of the 30,200, 9,700 is in hybrid strategies. Uh, so investors right now are showing a propensity for a balanced risk. They're looking for smoother returns. Okay. So what has been the performance? So it's a little too early to gauge the performance. Some of the products have a history of just a few months, in fact, because as we talk, products are getting launched. But depending on the data which is available to us so far, they're showing far less volatility than mutual funds. And some are showing a lot more stability. Some are a little more volatile. So, and who's investing today in SIFs? Clearly, this is meant for the more affluent investors, people who are a little more evolved. These are people who've tasted mutual funds. So, minimum ticket size, as you know, is 10 lakh. So, your typical investors are HNIs, emerging affluent, and sophisticated mutual fund investors. So, what is not working so far? Any category which is just starting shows friction. So, there is friction here. What are the friction factors? So, there is relatively low awareness among distributors. When we are talking about over 3 lakh distributors, only 7,000 are now eligible for selling the product. A product remains a lot more complex. They deploy many more complex strategies and hence takes a long time for both the distributor and the investors to understand. Once they develop a longer track record, obviously we will see more interest in that. Client communication remains a challenge. Getting their expectations down as to what they can expect from an SIF, what an SIF can do and what it cannot do is a big challenge. Okay. So what will drive growth? Clearly, we will see many more AMCs launching products. We will have a longer track record. People will develop confidence because of that. We will have more distributors selling this product. And there will be a lot of strategy innovation. So right now, for example, in the debt category, we don't have any product, no SIF in the overall debt category. Okay, why does this SIF matter to you, to this particular audience? Point number one, for many years we've been talking about mutual funds here, and we've been talking about the virtues of mutual funds. That conversation is getting very repetitive now. Here is an opportunity for you to talk about something which is more evolved, which is a little more complex, which is a little more challenging, which is more of a solution. So the other thing why it matters to you is clearly it has business implication for you. The minimum ticket size is 10 lakh and hence or you would be obviously making more money. Average ticket size in mutual fund tends to be very low. And these are better portfolio solutions than mutual funds. And obviously, if you are dependent on a product category which goes up and down linearly with the market, your revenues get impacted. SIF to some extent offers protection against the markets and hence protects your revenues also in a market which may go sideways, which may go down. So summing up, what is it? It's not just a new product to understand. It's a business opportunity for you to capture early. As they say, the early bird gets the worm. So every new category rewards early movers, and I wish you all the best. Thank you so much.